Recording in progress.
Hi, everyone. Hopefully you're doing well today. This Sunday. I was outside in the garden doing some things and it hit me, hey, maybe I want to revisit the HELOC contract again and thinking about where I first started my journey in looking for a first lien HELOC. Let me give you a brief definition of a first lien HELOC that I found on the web. No one in particular. All right. A first lien HELOC is a line of credit and a mortgage in one. They are considered open-end mortgages. It is often replacing your existing mortgage taken over as the first lien or the first mortgage. So the HELOC paid off one of the mortgages that was in the first position, and now I just have a HELOC in general. But unlike a traditional mortgage, it also works like a checking account similar to a home equity loan. And for some time, I've shown you how I'm paying down a mortgage, I'm writing checks, I'm paying down my bills through the HELOC. Borrowers are able to apply direct deposits to the loan principal. I am not able to do direct deposits. My HELOC is manual, so I had to put it inside of a checking account and then transfer it over, reducing mortgage interest rates and home loan term, which I think is starting to do. I can also withdraw cash in the form of home equity loan for the 30-year loan duration without having to refinance. People choose a first lien HELOC to pay homes off sooner. I actually used it to pay off this 30-year mortgage that I was in of 16 years within 1 month sooner, while having the ability to draw out funds as they are needed. And as I go along, and having the $50,000, I can put money in, I can take money out, but that's only for the first 3 years of this particular HELOC. There are some other HELOCs that go 5, 10, longer, but for the HELOC that I was blessed with, I just went along with what I can get, and I can only draw money for the first 3 years. Then 7 years I can pay interest and principal only, or just the interest. And then the last 20 years has to be principal and interest, whatever is left. All right. So this is just again a general definition of a first lien. It seems to be fundamentally replacing an existing mortgage, and rather than being in a subordinate position like the HELOC I have, is actually placed in the first position. But I'm attempting to try to treat this HELOC that's in a subordinate second position as a first lien HELOC, in which I tried to get about 8 months ago, but I wasn't successful because of the debt that I was carrying. All right, so let's get back to the chart. So in mentioning the first position loan, which was 57,950, that's what I got the house at. If I would have gone to 30 years, then I would end up paying $67,128.23 in interest on interest, for a total of $125,078.23. Now, what I did was just simply take 192 payments, of which I've already made 16 years. So I paid $66,708.48 into the loan, and I had 14 years to go. By paying it off with the HELOC, I was able to save $58,369.75, but I still have this HELOC of 50,000 over here that needs to be paid down. All right, all right. So that original mortgage started on May the 5th, 2008. So I just paid it off. 16 years of payment about 3 months ago. It was a 30-year amortized loan, meaning that they had me already on the schedule of what I would be paying monthly, and a percent would go to interest, and a percent was going toward the principal. the monthly payment on that 30-year mortgage was $347.44. If you notice in 2008, that was one of the great capitalist crises in which they have had multiple capitalist crises. I purchased it for $57,950, but some of the homes in the neighborhood in Atlanta got down to as low as $25,000 to $30,000. So those individuals should be sitting on some nice equity right now. Again, I made 192 payments, 168 remaining. It was at 6%, and it was costing me $347 a month. That's not including the escrow. Escrow on the account. I think the escrow was $250 for insurance and $250 for the taxes and $150 for the insurance. So now that I no longer have the escrow, the taxes, and the insurance, that is going into the HELOC to pay it down. When I was paying a mortgage, the escrow and the taxes was being collected by the lender, but now that I'm a collected because I have no mortgage and have no lender collecting that, that's going into the HELOC to pay it down faster. That's, I think, one of the benefits of the HELOC. And critics of the HELOC itself and velocity banking, I don't think they have pointed out this fact as much as I have. In general, I've watched a number of videos, watched a number of critics of velocity banking, and I don't think they have considered the savings from the escrow that goes into the HELOC that can help reduce the interest that I'm capturing. So any critics out there of velocity banking and HELOC, if you run your numbers again, I would definitely love to see what you're doing with the escrow numbers and how it's being used and the interest savings from it. So jumping over to the HELOC, I've already mentioned in previous videos, the HELOC is 10.25%. And it's 30 years. I replaced that with a amortized loan of 14 years that was left. So I'm on a schedule just like the other loan, except that I can pay interest only first, then another 7 years of interest only, and I can start doing the principal. And at least the last 20 years, I must pay whatever the principal balance is and interest that accumulates on top of that. So I'm trying to figure out definitely again how to realize this $58,369.75 in savings when I still have this HELOC that's sitting over here and has to be paid. These are everything that was in the HELOC that totaled the $50,000. Mortgage 35,701.46. That was this mortgage, and what I have remaining, I paid $1,735 in points. $6,289 was paid for automobile. 2 credit cards was taken care of at 906. A pledged loan with a credit union that was taken care of at 406, and then other costs at 625, and then cash at closing. As I said, I was in the yard and I wanted to go back over this again. So when I started thinking about the cash at closing, is rolled into this 50,500, devil in the details. So I'm actually paying interest on the money that was provided to me at closing. So the longer I carry this loan, the more this cash at closing becomes irrelevant, because they rolled it into that and is a part of the interest payments. But again, I was happy to get that HELOC and get off the ground to test principles and practices of velocity banking. So again, one of the main things that I wanted to just come back and say is that I tried to get a first lien HELOC in December. I was unsuccessful. I needed to clean up my credit. I did that 5 months later. I was able to get the HELOC product that I have. It wiped out this mortgage. So what I'm gonna start doing and thinking about is, okay, this was a HELOC, this was a regular mortgage that I had that was still amortized, that I was gonna pay interest on, sitting at $35,007.04, 46 cents. So with the HELOC, I'm gonna just simply say, okay, since I replaced it, I'm gonna create my own first lien HELOC, and it's gonna be at a rate of 10.25, 30 years, and I'm gonna see if that 10.25 rate, 30 years, will beat this this 30-year remaining 35,701.46. So 6%, 10%, I increased my rate by 400 and by 4.25%. Why would I do that? Well, I wanted to really test the idea of velocity banking, HELOC, first lien mortgages, because I really hadn't heard a lot of people in various communities talking about first lien HELOCs. I asked around my family, my friends of different race and ethnic groups, social classes, and fundamentally only just came across one person with a HELOC, but they are not doing velocity banking. So I just wanted to experiment with velocity banking, give some real world experience, pay down my debt. If it goes well, then I'm gonna shift over to two additional mortgages that I have at $110,000 that's remaining, that's still lower than a HELOC, and continue to test it. All right. So if you're interested in working with me, I'm also do some credit work in terms of looking at velocity banking, looking at the credit cards you have, small business LLCs. So I have a couple other things that me and my team work on. Love to have you to come aboard and see how we can work with you to help you to reduce your debt. All right. So that's it for my attempt and another set of series. We're dealing with a first lien HELOC. All right. Thank you very much. You have a great day.